morning, Matthew. My name is Allan Ritchie. I'm the Executive Chairman and CEO of Adavale Resources Limited, listed on the ASX with the ticker code ADD. We're a junior explorer. We're focused on a project we acquired about 9 months ago, which I'm looking forward to tell you all about. It's a gold and copper project in Parks. We call it our Parks project. It's a combination of tenements, one of which is a brownfields future small-scale mining opportunity known as London, Victoria. And it's a former BHP gold mine. It's very exciting. And the other 5 tenements are our greenfield exploration licenses, where we hope to, like many juniors, find a nice discovery hole or two and bring lots of shareholder value to shareholders. An important thing I like to mention is all of the directors and officers in the company, the 4 of us, have bought on market, acquired over 5% of the company. For example, most of us take our directorship package is in shares only. So I take a modest amount as the executive chairman and CEO, just in shares. My NED does the same. So that's the approach we have. It's all skin in the game, all belief in the project, and we save all the money to go in the ground.
That is attractive indeed. And who's this gentleman sitting beside you, figuratively?
So my name is David Ward. I'm the newly appointed managing director of the company. So I originally joined the company about 9 months ago as a non-exec director. I was doing another job at the time at Broken Hill Mines as the chief geologist. And I joined when I saw the projects that were acquired by Adavale. I saw the projects come out of private hands into Adavale, and I made a couple of calls, and shortly afterwards was finding myself standing at a booth presenting the projects that I'd spotted at a conference. So and then very recently, in the last 3 weeks, I've joined as the managing director. So I'm a geologist, very strong focus in New South Wales. I've worked across the Lachlan Fold Belt in many different projects. Newcrest, Cadia operation. I was there for some time. I actually worked for the company that was the last operator of the London Victoria mine. So I've been around a bit in and out around New South Wales and the eastern states of Australia, doing exploration for copper, gold, and porphyries.
David, I appreciate that introduction. Actually, might have to do the same with you if you don't mind, Alan. What's your background? Where have you come from?
Yeah, so my background's as an investment banker. I was an energy and resources specialist for nearly 3 decades. I've worked in London, New York, Singapore, Hong Kong, Paris. That was nice, and of course Sydney and Melbourne. And I guess for my sins, at some point I was asked to join or assist the risk advisory committee of a particular spin-off of a larger listco, and then asked to assist another group. Suddenly I'm sort of asked to join a board. Some years, so I've been serving boards for nearly 15 years. What I try to do now is to put my own funds in behind a company and an asset and get behind a project and bring together a fantastic team. And it's certainly what we have here. Pretty highly committed, intelligent, passionate team with skin in the game.
Right. Okay. No, like I said, I do love the corporate structure you're suggesting. Maybe we'll get into that in a second. Tell me, you've alluded to how you picked up the most recent deal. Can you give a bit more colour on that?
Yeah. So about 9 months ago, we were sort of looking for a new project in the change of I was changing the team. We looked at it, sort of, where things were going. We looked at gold for the next 4 years was, in Trump era economics, was definitely going to be a very strong commodity, just like critical minerals are too. We had a very strong belief in gold, so we were looking around for some projects, and we were fortunate enough to meet the same vendor as Waratah's Spur project. You've ended that about 2 years ago. Waratah going fantastic. They were a very small cap company at the time, and now about over 150 mil market cap in Aussie dollars. So they're going very well. They hit 200 at some point too. So we met the same vended these projects in. We worked really well together. We did it for an excellent price. It was 900,000 Aussie dollars, all scrip deal. Now, the important part is soon after, within months, we developed a maiden JORC of 115,000 ounces. We choose 107,000 ounces with a higher cutoff grade, but if you think about the buy price, the amount of ounces, we created some significant value there. And since then, we've moved quickly. The team is constantly visiting site, planning exploration, implementing exploration plans. We've done our phase 1 drilling. We're now doing phase 2 drilling, all in 9 months. We're on our greenfield, and that's just at our brownfields. At our greenfields, we're doing multiple projects, IP, mags, geochemical, grid-based geochemical surveys. Very swift, but very systematic. Now, we won't sacrifice being methodical, but we will still move swift and maintain that systematic approach.
Okay, and just sticking on the corporate for a little bit longer, you've raised some money recently. Can you sort of break down the register? Gleneden is involved. Is that, do they have day-to-day inputs, or is that? But what's the story there?
That's a fantastic cornerstone holding 20% of our company. A very successful backer of numerous mining stocks, a real specialist over decades, gets behind certain stocks. Is a wonderful mentor to talk to. Very sticky, very long-term, looking for huge value. And, he's chosen just a few companies to get behind in this exact manner. And it's great to work with him. He's just a wonderful person to bounce ideas onto.
Right, and obviously you talk about sort of moving or changing the team around a little bit. Obviously David's come on board. What's the actual brief? I know what you want to do. What's the actual brief for David? What does he need to do in the short term?
Well, yeah, that's good. And look, I'll preempt some of David's things, but the brief is we met. We talked about the passion of this project. And David will tell you, as a young man, his early days, he did work for the former owner on that London Victoria site. I got a sense of there's something to go and finish here. There's some business to go and finish. His experience and expertise is well renowned. A number of the geologists around the Lachlan Fold Belt have, highly respect David. So it was great to sort of bring him together in the team and create that. Together we're creating, with the quality team that we have, this wonderful, driven, ambitious, but as I say, systematic and methodical in our approach to building value. We can see that there's value to bring here. We've got the right jurisdiction. We've got fantastic licenses. The neighbourhood is amazing. So we're all quite driven together. And the idea is to maximise shareholder value. And as I say, we've got two methods to do that with our brownfields future small-scale mining opportunity on one hand, or I like to say we row with two oars. So with one oar, we have our brownfields future small-scale mining, and with our other oar, we have the greenfields opportunity where we hope to find a nice discovery or two or three. And it is porphyry country with epithermal dome opportunities. So there's multiple layers, and with the kind of neighbours we have, I think we've got the right team to discover that maximum value. Okay,
and let's talk about that, because I think the strategy, or the business plan, the strategy, one of the things I go for straight after understanding who the team is, you've got this brownfield with London Victoria, and you've got the greenfield opportunities with Ashes and Males, etc. The rest of the portfolio. You've raised a little bit of money now. How do you maximise the efficiency of that capital allocation over the next 6 to 12 months? Because talking about hunting porphyries sounds expensive, but you've got a job to do in the short term, kind of drive that share price up, and obviously hopefully make future capital raises just that little bit cheaper. So what is the market reacting to at the moment?
Yeah, That's a great question. Yeah, certainly we don't want to frighten anyone from juniors hunting porphyries with great big expenses. Now, what we've got obviously with London Vic, I mean the type of program we have here. Our first phase was about a 350,000 Aussie dollar program. Getting nearly 14 holes done, and that's an all-in cost too. So RC, but with some modern technology, and I won't steal David's thunder on that. He'll tell you a bit about our televiewer approach. It's a very impressive tool to maximise the learnings from each hole. But we are drilling around a known old BHP gold pit. This is a real, it's a blue blood gold pit here. So we can move quickly, at quite a cheap price. Our second phase program is going to be about the same price that we're in right now. So, and our corporate costs, as I mentioned, are very low. So we're securing the maximum bang for buck, I suppose. Then, of course, look, doing some of the work on the greenfield sites, like you said, porphyry is expensive, but there's an abundance of epithermal dome opportunities that we can exploit. We're using modern techniques, grid-based geochemical surveys, espoused perhaps by, you might know Scott Halley, of course, and the wonderful modern exploration techniques he uses. We're applying that as well. So it's a much lower cost approach. If we and we'll do some IP and mag, some sort of cheap geophysics as well, to then vector in to potential drill targets. And we're finding 200 meter depths might be where we go. It's inexpensive to begin with. Should we find the opportunity for something either orogenic or maybe an epithermal dome to a potential prensile porphyry, well, we can see that there might be some justification to go deeper, and there's plenty of big players around who'd be excited about that. There's the Lachlan Fold Belt is prolific for giant miners working with juniors. Earn-ins like, say, Inflection from Anglo Gold. Inflection are receiving an earn-in of up to 140 million. Anglo Gold have also done the same with Kincora, up to 110 million. But there are wonderful opportunities should we have that sniff of a good porphyry as well.
Okay, and I promise I'll get off corporate in a second, but I think it's important. With some of the other, I guess, non-core, based on what you said at the moment, like uranium and nickel, etc., are the holding costs, are they onerous, or can you hold on to those assets, or will you kind of divest them at some point?
No, that's a great question, because we've been around for a while. We've all seen the U-shaped curve of commodity pricing, and we know nickel's definitely at the bottom. We were discovering some wonderful massive sulfide after massive sulfide. Sadly, as nickel was going from $45,000 a tonne to $15,000 a tonne, we have managed our holding there right next door to Kabanga. It's wonderful, highly prospective ground. So we've managed our cost structures very low, and we're working just nicely with it and comfortably on the holding cost. Similarly with our uranium projects, again, wonderful neighbours. Heathgate with their Beverley and Beverley 4 Mile, as a producer, right? Some of our license actually is abutting their license. We've got some great neighbours. But Boss Energy's not too far, so it's wonderful ground to hold. Uranium's starting to move up. It's starting to get nice, and I think it'll be a great year for uranium. And again, on a good low holding cost. But we're able to make certain bits of progress at high value, visiting the ground at the right time, getting more information, accessing old geophysics files, reprocessing historic airborne magnetics and EM more so, to learn more while we're awaiting another critical time.
Okay. And just finally on this one, which is, I always like to know who I'm getting into bed with, in a sense that, what are you? Is it we are a near-term gold producer, or trying to be? Are you a district scale discoverer of projects, or is this something where you're just trying to, I guess, follow the market and survive, quite frankly, which has been, the kind of key driver for a lot of exploration companies. until one of these multiple assets that you've got comes good. How do we view you?
I like to think we're, a gold-focused explorer with an amazing opportunity to bring some near-term production. I don't think there's many explorers that have that opportunity to be funded. So, look, there's a little bit ahead of that yet. I don't want to get ahead of myself here, but there are, we'll be doing some met testing and scoping studies the back end of next year. There's probably a phase 3 drilling program to progress with. I feel confident of what we're looking at here has or will increase ounces in the ground at that brownfields opportunity. So I think it is exciting to have that, but sure, we want to bring some exciting discoveries too. That's a certainty.
Okay,
it's good to have
David.
Better
get you to jump in here, David.
Absolutely.
Tell us a little bit about London, Victoria. Okay, what you obviously worked there before, but what data has the company got, or what has it inherited with this recent acquisition, or earning, I should say?
So when we started, so we had the what was the data, the drill hole data that formed a mineral resource estimate. So that is a 25 metre spaced resource drilling, and then we've used that information in order to do an upgrade to the 2012 JORC resource. So it's now a current JORC compliant, current JORC compliant resource. So that's a bit over 100,000 ounces, a bit over 1 gram per tonne. So that's the data that we've got at the moment. So one of the things that we've discovered, there's things that we've discovered in the process, right? So when you're talking about data in itself, so the goal for everyone who's got an open pit is to acquire the grade control data. And sometimes it can be pretty hard to come by. So what we've actually discovered is the hand-drawn BHP gold, hand-coloured with pencils, old school grade control maps. So hundreds of them, right? So we've just discovered this recently. So that takes the data that we have in the pit, right, from 25 metre spacing to 5 metre spacing. And we've got, so we're in the process of, we've scanned and in the process of acquiring digitally this information, and that'll provide a really important tool for us to understand the structural controls on the gold mineralisation within the pit. So our level of information that we have available to us for the London Vic pit is just is on a bit of an exponential curve. So the other thing we've done more recently is actually we know that there's a strong structural control to the mineralising event. So we've actually got a specialist structural geologist to come in. He's used some pit mapping and some new technology that we're using on some of the drill holes in order to create a 3-dimensional structural model, which we're using now to validate. We're validating with that structural geology model by drilling some more holes in a specific area around the southern part of the pit that will really tie down the controls on mineralisation, which is a really important step for us. So we're really made a lot of progress in that area recently.
And he's basically, from what I can read, he's identified this kind of major east-dipping shear as the kind of primary control mineralisation. Is that right?
Yeah, that's right. So I think it was pretty well understood that the pit's 1.5 kilometres long, and you can see the mineralisation, right? We all know that it's a east-dipping shear. It was just the other components to it. So what we'd actually figured was that we had seen some evidence of an anticline features within the deposit. So a fold, right? And then what we've discovered is that is actually a type of fold, is a parasitic fold on the east limb of a larger anticline, and then there is a dextral, so a strike slip shearing, which is overprinted on that parasitic fold, and that appears to be the control on mineralisation. So that gives us some view on that the deposit will repeat itself, right? In the folds are really tight. So as the folds get really close together, they'll repeat themselves. And then there's a dominant plunge to the deposit as well. So certainly in the southern part of the pit, the deposit plunges to the south. So all of this information that we've gathered recently and structural studies just allows us to get the most bang for buck out of their next drilling program, which is underway.
Okay, in this I think it's about like it's a southern plunge, right? What's the sort of maximum depth extent you think this is says likely, before it kind of transitions into a sort of different structural domain?
Yeah, so these things are, as I like to say, is they're not bird shit. They didn't come from the top, they came from the bottom, right? So this will be, right, this is coming from the bottom, right? So when you say depth extent, how deep do you want it to be?
That's a good old Aussie phrase, which I've not heard before, but I'm loving it. Which case, okay, well, let's move on to maybe sort of things like phase 1, phase 2 drill results and implications from that. What can you tell us about? Are there any kind of holes that kind of stand out for you, and what can you tell us?
Yeah, so certainly. So prior to us actually getting the structural study done, we actually did a round of drilling, right? So we jumped straight in and started drilling holes underneath the pit. So we had 14 holes. And then the key hole was actually the 14th hole. So hole 14 intersected 48 metres at 0.82 with a high-grade portion of 25 metres at 1.2, about 100 metres vertically below the pit on the southern end of the deposit. Right? So the data that we collected, some downhole, what we call downhole televiewer data, which is effectively we're taking a oriented photo of the inside of each of the RC drill holes. So this gives us what is effectively a digital version of a oriented core hole. So that, along with the pit mapping, then the structural geologist had actually put all that together for us. And if we'd done the structural geology model first, we would have drilled hole 14 first. But so hole 14 is obviously the key hole now, right? So hole 14, although we drilled it before the structural study, if we'd gotten the structural study done beforehand, we had that data, we would have still drilled hole 14. So it's key. And then we're well into our second phase of drilling, which is what we're doing is we're following up and validating that that 3D structural geology model in and around the southern part of the pit, for just to really tie down those controls on the mineralisation and to extend the known resource. So that hole 14 was well outside of the existing resource, 100,000 ounce odd resource, and we're drilling in that area again now and expanding our knowledge on those structural controls.
How deep is the pit, and how much further does this extend the mineralisation below the pit?
Yeah, so the pit in that area is probably maxes out at about 80 metres, right? So right at the bottom depth, but most of it's like 50 metres deep. It's pretty shallow. And then the deposit, so then we've hit the deposit again in that hole 14, 100 metres below that again. So, and this is way out, well outside of the resource, the known resource. So there obviously is additive, right? When we come around to do an update to the resource estimate, then this is just an additional area that hasn't been evaluated before.
And what are the kind of you've done some like well, I don't know, I can't remember the number, but some shallow holes, also high grade. Has that should change your thinking in terms of the structural complexity and unlined surface potential?
We actually drilled some short holes in the pit, right, as well, right, in that first round of drilling. And that was just we're just trying to get a feel for quite a number of things, like how are the rocks going to behave to the drilling in the first place, right? So we're doing like what is called fairly cost effective, what's called RC or percussion drilling with hammer drilling. We can get quite a bit done fairly cheaply, and then we're using this extra tech to upgrade to add that structural data to that, right? So what we found is that because of the shearing, there's the shearing and in the pit there's some strong foliation, so some of the holes deviate. So what we went that information that we got was not just about the fact that we eat gold right in the bottom of the pit, but we also got information about how that how the drill hole is going to behave, so the next round of drilling is more effective as we go. So there's a bit of a combination. We know now that what we're seeing, the mineralisation we see in hole 14, we can see that in the bottom of the pit. It is exposed in the bottom of the pit. So we could walk right up to it now, and put our hands right on the deposit. There's actually a ramp on the west side at the southern end that was probably left behind because the gold price was so low that in order for them to get the gold that's actually under the ramp, they had to do a little cutback in a new ramp. But then the gold price tanked out at some $400 US. It wasn't worthwhile doing at the time, but now we're at over $200 a gram Aussie. It's a completely different scenario.
So what do you think you need to get after? Because obviously people are going to want to see you start, demonstrate scale potential, thicker zones, higher grades, continuity along planners, all the kind of good, sexy stuff. But what's the kind of order of play for you with the capital that you've got available? Because you're going to need to kind of get people excited with the headlines and the press releases, but at the same time, you need to know how to get after this thing. So, how do you play that?
Yeah, so look, the current drill program is a bit of a two-pronged approach for London, Victoria itself, right? So not only are we following up on that hole 14 and the structural geology model in the southern part of the pit, just getting some more data in and around that that will provide some good news flow if we're drilling around that what previously defined hole, but and then we're trying to expand out from that point as well, right? So this is a bit of a two-pronged approach. So we're doing some work in and around the hole 14, but then expanding out as we go, right? So by the time we get to Christmas, we would have done probably another 13 or 14 drill holes in that area. So there'll be extensional holes along strike, as well as some close space stuff that was going to be additive to our structural geology model and our understanding of the deposit. So we've got a foot in both camps there.
Okay, and so managing my expectations in terms of JORC resource upgrade and where does that fit into the equation in terms of timing?
Yeah, so obviously, if we're drilling, this is a really good question, right? So we've started drilling again not that long after the first drilling program. So as soon as you drill another hole, then you want to include that hole into the next resource. So and then we'll go through Christmas, and then we'll get those results back in let's say the end of January, and then we'll be back on deck again. I mean, there's multiple drilling businesses in parks within a 10-minute drive of the site. They're all pretty keen to work on this project because it's proximal to their space. So I think that we'll be back into it pretty soon after. So there's got to be a line in the sand we draw. Where is the line in the sand? If we're still drilling holes and getting more gold, do we want a resource? Yeah, do you want a resource with a 20% upgrade or a 50% upgrade? It's just a matter of drilling the holes and then just taking a moment in time to step back and from the drill rig and actually do that work. So it'll take a month or two to put together that data, but we'll be collecting data all the time. So
Alan, it kind of comes back. It comes back to kind of strategy a little bit here, in the sense that I've got a whiteboard over here with 24 companies who've changed from exploration into a kind of nearer revenue story. I said they're going to do the Aussie model. The North Americans don't do what you Aussies do, but they're giving it a go now. Which is when I look at something like this, and you've got multiple one of your presentations. You show sort of multiple zones outside the conceptual pit. So do you keep drilling to kind of show a larger open pit shell, or do you show something that can transition to underground? Because ultimately, revenue is the thing seemingly seems to be appealing to the market at the moment. So how quickly can you move this thing forward?
Look, I think that like at the moment, the existing site is being used as a quarry. so that they're actually mining road base out of the wall of the pit, right? So on the east wall of the pit right now. So there is also the operating mill. The mill that was operating at the time is still operating. They're just doing something else with it. They're just crushing lime instead of rock with gold in it. And so they're mining there already. The mill's going 24/7. There aren't that many barriers to entry at this point. And so it's really a question, Alan. Like, what are your thoughts there? Like, you just jump in.
Yeah, look, I mean, the opportunity looks amazingly. It's something costing wise could be very feasible. I mean, we're you can see the smile on my face. We're quite excited about. We've got an in situ mill nearby that's operation. The CIL plant is still there. I mean, would need a little refurb. It's the cutback operation, where they're removing road base, which is essentially our waste. So it's going wider to the east, which means we can go deeper, and looks like a very simple cutback opportunity to get to some nice ounces. But having said that too, for early movements, that there are an abundance of gold processing centres. 50 kilometres as the crow flies is Alkaneen's Tamingli processing centre. So 70 kilometres by this wonderful new road, probably using some of the road base from London, Victoria, that was just built. So it's a great straight highway. Glitters all the way up to potentially, but anyway, we'll be able to get to that processing centre. It's hungry for feedstock. So that's a nice early transition, and we can start assessing that cost base, what the mining cost base looks like compared to what a tolling cost base looks like, to processing in situ potentially in the future. Opportunities are abundant. We'll work that scoping study out probably after the third phase drilling program.
Okay, so David, so on things like the geophysics, geochem type stuff, have you done any work on trying to understand the geochem for, identifying pathfinders, alteration zones, etc., vectoring towards these continue to vector towards these higher grade zones, because ultimately you're going to need to a bunch of that. You're going to need to work towards doing some met work, and you got to kind of choose what met work you're doing from, which parts of the project, to be able to kind of have conversations about, feedstock for tolling agreements. So can you tell us a little bit about the technical work?
So we haven't actually done any metallurgical work right at this stage. So we're still early stages. So we're going to be lining up for some met work very soon. So we're receiving back some of our bulk rejects from our sampling programs previously to do some of that met work. It is like at first glance, it looks like a fairly simple, straightforward approach, right? So although we haven't done that met work on the primary mineralisation, it looks very much like mineralogically, very much like the Tamingli deposit just up the road. So it's in actually the same, what we call the Parks thrust in that part of the deposit, in that part of the Parks area. So it's a quartz, pyrite, aster pyrite mineralisation. From a identification perspective, we're getting a feel for what this thing looks like. Basically, it is a dark greeny grey coloured sheared volcanics, and when we go into the mineralisation, it is bleached looking, like paler coloured with sulfides. So visually, the deposit's starting to look fairly consistent. Metallurgically, we think that it should be very amenable to a standard run-of-the-mill simple CIL plant.
Okay.
Yet to do the work, but it won't be far away.
Yeah, look, I'm pushing you a bit. It's like it's early days, so it's all good, but I'm just trying to get a sense of the potential, the ambition, the aggression to look at this tolling, because like say it's always a nice anti-dilutory conversation to have. with companies for sure. So 2026 coming up. Maybe just remind us what are you going to be delivering for us in 2026?
Well, straight up, we're like I've got the high vis on. We're well into the midst of our second drilling program from the London Vic deposit. So first thing up in the new year, we'll be getting those results back. So we've got batches of samples off being dispatched to the lab today. They'll be back. We expect before the end of January. So it'll be straight up first go. We're getting some work done on some drone magnetics for that area as well. So what we know is the volcanic rocks that are hosting the deposit actually have primary magnetite in them, so they appear in a magnetic survey as a magnetic high. The mineralized zones, the alteration associated with mineralization mineralization destroys that magnetite, so they appear as magnetic lows. So that'll be really interesting to get some detailed drone magnetics on the project. That'll be a great step forward. We're actually still progressing some work on the regional stuff as well. So we've got some really exciting regional targets that one of the questions earlier was about how you go about exploring for a porphyry copper gold deposit and trying to do it cheaply. So a lot of these areas, a lot of the prospect areas that are prospective for porphyry copper gold and epithermal deposits are actually residual soil profiles. So we can get in there and we can actually do surface geochemistry on these. And quite a few of these project areas are already showing really good signs, some great smoke. So some ashes, for instance, has got gold surface samples up to 10 grams per tonne with silver associated with it. We're doing some magnetic surveys over some of these areas where we actually think we can see in the regional magnetic data there's some of these magnetite destruction zones that look like these circular classic porphyry style magnetic features, and we can get in and test them quickly, simply, systematically with surface sampling. We're not drilling undercover, and we're doing it quick and efficient and cheaply.
Well, I'm sure we can come back to what's going on at Ashes and Front Gate and the rest, Parkvale rather, another time. But right now I'm kind of focused on Victoria, London, Victoria. That seems to be the exciting bit. I mean, Alan, I kind of give you the last word here. Does this company differentiate? How does this company differentiate itself from all the other exploration stories out there? And why should people be looking at you?
Look, I think one of the things you said, it's always about a great team. Okay, a team with a bit of a proven track record. As a team together, we've achieved in 9 months of owning this project a JORC. We're on our second drilling program. We've completed IP and magnetic surveys. The amount of actual continuing work out at site with over 20 visits in such a short time frame is using that as the proof that we'll deliver on all these near-term catalysts. So we're an excited team. We're a team with skin in the game. We're not taking, there's no lifestyle company here, so our reward is from share price performance. So that's a definite feature. And I like to think we do give our investors the advantage of rowing with two oars, the brownfields or, with that future small-scale mining. And, of course, these greenfields opportunities to have a massive multiplier from a nice discovery hole or two.
Gentlemen, appreciate your time today. Thank you.
Thanks,
Thank you, man.